The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days. And today is the first trading day of March, the 2nd of March. And what's really important about it is that the Dow has made another all-time high. The S&Ps are lagging. Oh, the way this works, it's like, I can't explain it. It's so difficult to put into words. It's as if the little time cycles in the different indices, the different waveforms. I'm a student, I guess you can call it a student, of the ocean waves. I'm a student only in that I've watched them a lot over the years. Grew up with them, Cape Town, South Africa, right, Sea Point right there. I grew up on the beach, well, just about the beach. And I used to watch these waves, monster waves. And so in the back of my mind, I have these cycles, excuse me, the way certain waves look as if they're going to be monster waves, and then they just turn out to be fizzlers. They really don't do anything. How you can see waves that I know on the in Durban, South Africa, on the it's not called Durban anymore, but on the East Coast. That's warm water. It was the first beachfront area anywhere in the world to put in an electronic fence to keep away the sharks, because they used to have terrible shark attacks. And there they used to have these double waves. So a wave's coming along, and then you'd get another wave going a little quicker, and it would overtake. That's like an overlapping wave in my work in the Chapman wave sequence. And then you would think, oh, that's going to produce a monster wave. But basically what happens, I'm not a scientist, this is my observation, is that the speed of the one accelerates a little bit with the overlapping wave, while the speedier one deaccelerates, and very quickly they amalgamize to one wave, and then it just fizzles much quicker than you would have thought. And there are other times where they come to exactly where the other one at the top just overlaps and just keeps going. It's almost like a tsunami in its own way. So I have the sequence in my mind of how things are going to unfold. And the most important thing about this unfolding pattern, I wouldn't have spoken about it today, except the Dow just made a new all-time high. And let me show you something here. The composite index, the very broad, not the 100 NDX, NASDAQ 100 NDX, it is the 2,000 or more composite index, has just done something which to me is quite remarkable. So I'm going to show it to you, COMPX, right there. In March of 2000, in a very quick sequence, it went peak ABCD, whoops, vertical, a parabolic move into the March high. And the more I thought about it over the weekend, 7 hours on the way back from New York with that storm going on, just a long ride. I just try to be as safe as possible. 25, 30, 35 miles an hour. It took 3¼ hours to get there, and just almost 7 hours to get back. I don't mess around when it comes to slippery conditions. So I'm just chugging along there. And it gave me time to think. And I'm thinking here that possibly the internet has had the influence on why we are not seeing the comp index come back, the NDX come back, why it doesn't match the year 1999 going to 2000 in terms of hype, in terms of the incredible action that happened even pre-market or post-market, let alone during the day. Because maybe people are, and I didn't really want to talk about this. In fact, I wasn't even going to talk about it until a split second ago. But it's on my mind, and I might as well talk about it. One of the things I fear the most is that when the final big crash comes, final, I shouldn't say final, when the really big crash comes, and it will come at some point, because there is so much individual trading going on, that possibly what we're going to see, and this is something I do fear, in the quietness of one's home, it just as you must be getting in the online gambling, where no one knows what happens overnight, where no one knows who's online and who's just lost their house. You just don't know it. It isn't like a big public thing that it happened at the casino, whatever it is, that there's going to be this stealth bear market. And it's going to be a bear market. How did I get into this? Well, I'm in it. A bear market that takes away from people money that they really didn't even mean to lose because they're going click, click, click. And that's going to be something we've never seen before. We saw it a little bit in 2008, 2009, but it really wasn't quite what I'm thinking of. So we'll believe me, there's plenty of time to even talk about it. I just wanted to bring it up because it was on my mind. But I wanted to show you with two things. In this overlapping wave business, I'm going to get to that in a split second. I just wanted to show you that in March of 2000, 5,132.52 was the all-time high. You're going to hear a big bunch of news about 5,000, this 5,000, 5,000, 5,000, just keep going on about the 5,000. Well, the NASDAQ just hit 5,000.33. That is important. That's really important. And so far, it's in a couple of months prior to the left side, right side price time match, and that's really important. And it's also important because back then I said I don't believe, well, I was talking about the IndX 100, that the NASDAQ would ever again in my market lifetime get back to these levels. I just never thought it. Well, of course, there was a crash. 82% depends on where you take it, from the high of 51. I think I was basing it on the IndX 100, but yeah, it's almost the same thing here, 51.32 down to 12.65. I mean, that is a hit of mega proportions. But look how we've come back. Look how beautifully we've climbed the line. No, it went down to 11.08, sorry, back in October of 2002. The most recent low was a little higher, 12.65. So look how beautifully it's steadily come back above the 9-period exponential moving, just that one little phase over there back in 2011 we dipped under it. So this is impressive. It really is impressive. Now I'm going to move this aside. I'm going to get to the weekly charts, which are absolutely imperative for me. The weekly chart is still a peak C in the S&P. It is not that in the Dow. It is just extended from last week's doji candle to a fractional higher high. It went from 18,244, the high of last week, to this week it's already hit 18,257. I still think that there's a chance. So that's leg E in the daily chart. The QQQ series, that's the NDX 100, has gone to leg C. We're waiting for a D, and it's gone to a C. That's getting closer. There it is. And that's very important. The 120-minute chart, did it recycle? Yeah, I guess it did. A, B, C, maybe there's going to be a slightly higher high there as well. And what's important is that the weekly chart just merely extended from last week. Okay, let me run the numbers. The Dow is up 111 at 18,244. Hey, that was last week's high. The S&P is at 2,012, up 7.52, lagging. It's up 0.36. The Dow's up 0.62. I just don't want to take the time to just to look at my other computers to see what's moving in the Dow. Meantime, back at the ranch, you've got the volatility index at 13.38, up 0.02. It's hinting that everything's not all well in Denmark, just for the moment. And composite index is up 30 at 4,994, having hit, as I said, 5,000, fraction over. The gold contract, so the gold contract, the GLD is down 19 cents at 115.95. Gold is down 5 at 12.06. Silver is down fraction at 0.033 at 16.526, and you've got high-grade copper at 2.68, actually holding quite nicely, not great, but holding quite nicely considering they had a nice bump up. There's a leg E/F. Maybe it's recycled to the upside, but hey, I'm pleased that copper is doing quite nicely. Especially since we have a copper share, and I'd like to see that keep moving higher. So what am I missing? I'm missing TLT. The TLT rallied quite nicely earlier in the day, rallied quite nicely on Friday. Today, blap, it gets hit down 176 at 127.77, making that H pattern. Remember I said the H pattern can go to an M pattern, and that's the pattern I'm expecting. Bonds themselves are continuous contract is, yep, there it got hit down 1.5 at 160.5. Now what's really important, we're looking at the dollar. DXY, the dollar index is bumping, made a fractional new recovery high. This is actually leg E in the weekly chart, or I'm going to call it just for the moment E/B, because there's a chance that it recycled higher. I don't know yet. And the euro is the EUR/USD. Is the euro-dollar currency pair. We're looking at that instrument is making that arch formation within the rectangle. So far, what it's saying is that the dollar could squeeze a little bit higher, but the euro is getting close to testing the left side low of 1.109, and that's going to be a really big test. If it closes under that, then as the dollar's recycled higher, so the euro-dollar currency pair is recycling lower. What am I missing? USD, JPY, and that currency pair, dollar, Japanese yen, is going for leg D, and I suspect it will make leg D above 120.47. Okay, and the pound, question in the gem, would I look at the pound? Wow, how many times have I updated this? Is it updated now? No, it's not. Updated in my notation. It says there, apply corrections to all windows. Okay, so this is leg A, B, C, D, peak E, pulls back. Yeah, the British pound continuous contract is consolidating right here. My suspicion is that it's trying to form some kind of a base. Base should be around about 1.5, 1.9, maybe 1.50, 1.9. If it gets there, it might not even have to get there. All it has to do is hold tight right here and get back to 1.5471, somewhere around there. And there's a good chance it's going to try to retest the recent high. So far, that's the story. But the MACD is good, turning down. Stochastics at 71%. It says, whoops, there's weakness here. Be careful. So I got to tell you, the downside will be that low bar of 1.53 made on the 23rd of February. If it takes that out, then I suspect it's going to consolidate right in there. This is the daily chart, right in that area. And that's going to be really important, because if it takes it out, we're looking at the 1.50 area. So far, it's done very well. It just needs a little time out to recuperate from that strain of, like I was driving from Brooklyn to Boston in the snow. So this is up A, B, C, D, E, and now it's just consolidating. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's up 109, S&P's up 7.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. I'm just going to see Netflix because of all that fuss that was made about the new show this weekend. Almost got to see it, but then didn't get to see it. And very interesting. Netflix is up only 2. It hasn't made a new recovery high at 486.51, which would be a new leg, well, alternate count G/C in the daily. And the question was, what about Amazon? To buy it right here, I would say it's a 385.65. Every bit of evidence says that it would like to go a little higher in the daily, but the weekly says that it should be, if this is leg B, it should go to a C and a D, and that's going to be very important. And that should retest the previous all-time high of 408.06 back, hey, whoa, I didn't realize it was way back January of last year. Isn't that interesting? Opens at 398, round number high. 398 opens and goes to 408.06 that month. Yeah, I think it's going to make a U-shaped pattern, and but the risk reward says that at 386. If you buy it now and it starts to consolidate, I think it's going to consolidate a little bit in the next few days. Maybe next few days, maybe into early, it could. And if it does that, then I don't know if you want to risk 8 points or so, 7 to 8 points. I'd rather Wow, it's a tough one. It's one of those cases where if it went 1 penny above the high of 389.37, I would buy it because it should be going even higher after that. So that's not very far away. Okay, so the question is, what do I do? Is the question that, or do you have it? For a long, yeah, here's what you could do. You could actually start a small position right here at 385, knowing that you would like to buy more in one of two places, either on a pullback based on the 120-minute chart. Would it be nice to do it early this morning at 379, because I was going to say under 380, but it's already moved to 385. No, that's a tough one. All right, all I can say is, if it was me and I was thinking that it's going to go to C and D for risk reward, I would try to have patience, because I think that the pop-up this morning is going to fade a little bit. That's what this S&P seems to be saying. And there's a chance that we can go another few days with the S&P consolidating and then only make that leg D next week. That's kind of what I'm thinking in the S&P, but I didn't anticipate more than a 30 to 40 point move in the Dow today. So all that stuff that's going on with Visa and MasterCard and Disney, that's very influential. Not the other stocks, but at least those stocks are. And I've got to take that into consideration. So here's my thinking. You could do a little nibble here, but your real entry should be, if you can get it, is under 380, a close under 380. And that's one way. And if you nibble here, then I would definitely just add a little bit at 397.38. And then I'd still try to have patience for a pullback, because what you really want is that strong leg C, which should be a strong leg C. If it's just nominal and it only goes to 392, 393, and then pulls back quite sharply, that's saying the upside is becoming very limited in Amazon. But at this particular point, I do see higher highs. That's the answer to your question is yes, it is a long. The details are really quite personal, but I'd probably say nibble here, but that's not really your position. Your position is on a 6 to 7 point pullback. That's where you already want to begin the position, start beginning, and then I would add on strength, but I would add on market strength, and I'd prefer to wait Tuesday afternoon to Wednesday to see how the markets are doing. All right, got that out the way. Next question was, I had a question. Oh, I had a very interesting thing that I read about someone who's very favorably inclined towards gold. Gold because of what has happened to bonds and what they're anticipating. I don't want to go into all the details here, other than to say that I'm kind of impressed as well with the action of gold. But I'm still looking at chart formations. And when I look at the individual stocks, like a GG, a Gold Core, or a Rand Gold, I usually look at the same kind of things all the time, or AUY, which was still doing very nicely, very low price or very high priced ones, Newmont Mining. Look at that, a beautiful chart. ABC's just made D and it's pulling back, and ABX. The gold stocks are saying something slightly different, and the gold stocks are holding really well. Whether or not this is the move that's going to take them much higher, or whether they need to do another retest, it really depends a lot, I think, on some factors, somewhere external and somewhere internal. I'll try to talk about it when we get back. Meantime, back at the ranch, Dow's up 116, S&P's up 8. Basil Chapman, Tiger Technicians Hour. Love to hear from you. And, Boston, skyscrapers, isn't that amazing? I'll talk about that as well when we get back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We're back. We're back live, and we've got Manjeet in Ellicott, Maryland. Hi, Manjeet. How are you?
Hi, Basil. How are you?
Good, thank you.
So I'm trying to wrap my head around a particular stock that I've been in and out since about the $10 range. And do you have the symbol?
Yes. So this is INFN. This is Infera Core. Now, I first thought, oh, yeah, I know this one. Then I looked and I saw no notation whatsoever on it. And then I said to myself, wait a minute, this is not the one that I was thinking. I think I was thinking of Infineon. So this is Infinera. Now, they do what?
So they're essentially communication equipment, so, like a Sienna, for example. But they do things a little differently. They do optical networking equipment.
All right. Okay. So they from the chart pattern that I can see, what they seem to be doing is they seem to be working on something that whenever there is news that pertains to maybe it's their product cycle, I'm not sure, but it is met extremely favorably by a gap to the upside, and that gap doesn't get filled. It's really impressive. I haven't seen a chart quite like this. There's one gap that did get full that was back on the 5th of September of last year. But mostly what happens is on the 22nd of October, it closes at 1061. And the next day it gaps up and it's at 1217 is the low. Then it goes all the way to a peak D, pulls back, and then it goes to an alternate count, goes to an E. Then it fails. That's an alternate count E/C. And now it's got something else. It's gone A, and then it doesn't go to B directly. What it does is it stops dead at 1440, and then on the 22nd of January, and the next day it gaps up with a low of 1636, and it's gone peak A, B, C, D. It's just gone to peak D. It's doing the same thing again. Now, I just wanted to see, this is on October the 23rd, and the next one is on January. So that's October to November. So those are earnings. Right. So what's happening is I like very much to see how stocks react cyclically with earnings. That's number one. And then to see how it holds. And this thing not only has held, it hasn't even come back to fill the gap. And this last one is holding very well. Now, the question, of course, is, did you have it? Are you in it? Have you been in it for this move? Or
I have been in and out since 10.
Oh, that's great. So you see now, he has another issue. Even though it has quite big pullbacks, when it does pull back, holding it from 10 instead of being in and out, this is one of those that would have been a great buy and hold. But the next best thing is to be trading it successfully. But it makes it, trading it successfully means that you want to be in for the big spike up, because once the spike is finished, it does go higher, but you've got a big bumpy section to go through as it's rebuilding for the next base. So now the big question is, you see, the daily, I love the action of the daily, except for one little thing. The technicals have become
starting to wane here. Yeah, exactly.
Yeah, but the price is what's the most, price is the arbiter of the trend, not all the other stuff. And the price is saying, well, what are you worrying about? I'm holding beautifully. Isn't this something to see? And I turn around and say, yeah, that is something to see. And the big question is, how would you get in trying to lessen your risk? That's really the only thing. A, B, C, D, and then I'm just seeing where we are in the weekly chart. It's got a little bit of a funny wave count. A, B, and it restarts, and then it goes A.
Exactly. I wasn't able to make sense of the weekly, but if you take it on a monthly, take it back 5 or 10 years, I'm thinking we're still on, we're still anticipating a peak D.
Yes,
we're
absolutely.
in a C potentially.
Yeah, but two things. Remember, I just you might not have seen it, but I just showed the composite index chart. Look at the oops, I did it again. COMPX. Look at not a C but an X. Look at this composite chart. This is gonna be, of course, this one's 15 years, but you see the way it's made a kind of a soft U-shaped W formation. It goes. It goes from the high of 5132, it goes all the way down to 1108, then it bounces up to 286, 2008-61, October 2007, pulls back to March of 2009 at 1265, and then climbs for that. It's like a bowl formation that's split in two. Now look at your stock, if I can remember the symbol, INFN, and look at that stock. It's almost a little mini, it's the same sort of thing. The only difference is that the composite index did not make a lower low the second time, and this one has, but that's fine. It just says, well, maybe it's going to make a lower high in the move, but it's still got the pattern that should. You see, this has got an AB, then a restart, A, B, C, D in the monthly chart that went to peak D in September of 2010. That tells me whenever a stock has the characteristic of being able to make 4 peaks, it tells me that's a characteristic that I should embrace. I should not fear it, I should embrace it. And in this particular instance, Infinera says it's the same kind of pattern. It's done that before. I'm going to do that so that people can see what I'm talking about rather than just make it a purely theoretical thing. So that's peak A. This is back in 2009. It goes peak A, then peak B. And then what happens is it goes B minus. Why? Because it has a restart in the Chapman wave that goes peak A. Now, this is something I've spent a lot of time on. In fact, I'm always trying to increase the methodology within the Chapman wave. And what I've spent the last, I'd even say it's more than a year now, is in a restart, the big question is, I'm going to do this now as a little exercise, if you don't mind. The low that was made in Infinera core, INFN, back in the month of March of 2009, went to peak A in April and then peaks B in June at 1053. Then it pulls back with the low of 649, and then it goes peak A, B, underneath the previous one. I usually call those gray A and B. I haven't got time to change it. And then it even goes to a gray C. But then there's a pullback that goes underneath the low that started us off at 649 for the second buy signal. However, it's still way above the 569. What I've been doing over the last, a long time, 12, 16 months or more, actually I've been doing it even longer than that, but I've been making it a specific thing with examples, is I'm trying to find out, is this a legitimate Chapman wave D that went to the high of the September of 2010? Or is it just another B minus because I have to restart because it went lower than the restart $6.49 July low? Well, over the period of this time, I've been finding as long as the technicals and the MACD is very strong, stochastics very strong, are good, I can take the original low bar of 569 and say it's all within that confine, and that even though it went lower, it's still above the original most important low bar. That's this one here of March of 2009, and therefore this really is a D. And that's why I'm saying to you, I believe, based on the chart formation that we're looking at, this should also go to a D. However, if you're not in it, what do you do now? It's had this great move. It's gone from the gap down in the 15s. It just hit $18.04. What was it on the 13th of February? And the low was a little spike to the bottom at 16.8. Now it's trading at 17.29. Even today, didn't want to be left alone on the downbeat. It wanted to be on the upbeat, and it went to a low of 16.95. Trading right now at 17.29. What do you do? I'm going to make a suggestion. I'm going to also suggest that you don't just jump in. You don't have to listen to me and just do it right away. Think it through. I believe, if I'm correct in chart formations A, B, C, D, I believe that the weekly chart is probably in a D. But most importantly, what I'm looking at, just for now, let's just say that the weekly chart is looking good. Maybe during a break, I'll try to get to it in a little bit more detail, or maybe tomorrow I'll come back to it because it's just a tad complicated to do right now. But I'm going to make the suggestion that if you've already made money in the stock, then you can use some of the profits at least to get your foot in the door right now. So if normally you buy X amount, I would say buy not even a third, just like a quarter. You're just tiptoeing in because you don't want to be, you don't want this to break out yet again without you being in it. At the same time, my eye says that there's a good chance over the next 2 to 3 weeks that it will be doing some backing and filling, and that it could probably go down to 1650, maybe even 1640. I don't know if it's going to break the low, the gap, and go below 1580 in this move. My suspicion is, from the way it's been acting, that it's holding very, very nicely, and that if you look at the weekly, you see that over the last month or 2 months, it's been making quicker and quicker consolidations. This seems to be one of those consolidations right now. So I would like my foot in the door, take a little bit and have a reasonable stop on this. I'd have even maybe a point stop because it's really a feeler position, but I'd like my foot in the door. And then what I'm going to say to you is the foot in the door is really just a start, and I would like to see where it's traveling Wednesday of this week to Thursday. So if you have a chance, you're able to call me Wednesday or Thursday. I'd probably say if it's just holding steady, Thursday's the day. But if it's starting to jump around and have bigger moves, but it hasn't broken to a new high, we need to look at it in a slightly different way. So that means that maybe Thursday's the day. So this week, let's have a look at it again. I would definitely at 17.30, you've had good profits, you played it well. I'd get my foot back in the door. That's just my thinking. Now, I shouldn't be saying this to you because you're the one that's brought it to my attention. You're the one that's traded it very well. I should be asking you, and I should be saying, hey, Manjeet, what should I be doing? But that's just based on my tech. Oh, I forgot to look at the 120-minute chart. I did look at it briefly, and then I put it away. And then it comes back. Yeah, the 120-minute chart says it's in a bit of a trading range right now. It's trying to form a base above 1680 to 1660. That's the area I'd be watching. So that's kind of my it really is looking good. And since they keep coming out with a good report, it should be one of those that appeals. Let me just look at the volume. Yeah, the volume's good. So it should start appealing to some of the fund managers who are looking at lower price, kind of off the major circuit stocks, and this seems to be one of those. Hey, thanks for bringing it to my attention.
All right, thanks, Basil.
Okay, so good luck with it.
Thank you. Bye-bye.
Thank you for calling. So that was INFN, trading at $70.30 in Finera Core. And in the communications area, the MACD, I didn't talk about the technicals because I think that Manjeet's playing it both in a technical and a fundamental way, but the technicals in the monthly, 88% in the stochastic monthly. MACD is very good, little stretch, but still very good. It's way above the 200-period moving average and way above the 9-period moving average. The 9 EMA is just crossed positively the 200-period moving average. That's a heads up to say, we're getting closer to some kind of consolidation, but since it's a monthly chart, every bar is a full month, so that could still be 3 months away before it has the consolidation. Now, the weekly chart is at 87% in the stochastic. MACD is good and steady. I like the chart. I think it's doing well. It's got 1649 as a 9-period moving average. That should be pretty good support in the shorter term. So we've done that. Oh, I had another question over the weekend. And I just got one in. Let me do this one right now. The one I just got in is CY, is Cypress Semiconductor. And Cypress Semiconductor, I believe, unless it's recycled, it's an E right now, acting very well. And there's the pattern I drew of the Chapman wave stalk leg formation. It looks to me like it really wants to go above $15.48 to start leg C. It's looking very good. Cypress Semiconductor, and has tremendous support between 1450. It's at 15.27 CY is a symbol. It has very strong support at 14.86, the 9-period moving average, and 14.50 should be very good support. Let's go to Dan in North Reading. Dan, how are you?
Good. How you doing, Basil?
I'm very well, thank you.
Wanted to have you take a look at this Argentinian bank stock. I know we looked at it quite a while back, and I had some luck trading it, but then I got out of it, and wish I hadn't now.
Yeah, isn't it a very interesting phenomenon? There are so many stocks here that if you treat as trading vehicles, you can make some money. But if you just buy it and put it away and you just forget about it, buy and hold, they've worked out beautifully. Now this one is starting to pull back. So BFR is Banco Francés, ADS. And I remember doing this chart, so I don't know why the notation is not there, but it's gone to A, B, C, D, and then it went to an E in the monthly chart, still acting very well. It's at 17.33. BFR is the symbol. That's boy Frank Ronald. It's a 17.33, up 47 cents. That'll give me time. A little break coming out. Give me time to do some work on the notation. I'll be back with Dan in North Reading straight after this. Dow's up 119, S&P's up 880. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Yes, so let me do this. We're looking at BFR, but just a real quick question because I don't want to run out of time about USO. USO is trading at 18.59 United States Oil Fund. It needs to hold 18 to 17.50 support. It's at 1859. If it doesn't do that, it's going to make that H pattern and keep going down. It needs to bounce quickly to 19.00 to 19.35 or higher. That's a resistance area because that would start to improve the weekly so you can get the M-shaped pattern. So I hope that helps you. It was a question that I was asked. And then let's go back. We've got Dan North Reading. We're looking at BFR. Don't forget, folks, Larry Pesavento is back today, so it should be a wonderful show straight after mine. So let's just go back to BFR. So BFR is in an area that has been very favorable and it's done very well. Just on a shorter term, it's made a peak E in the daily. It's gone to $19 round number high. Let me just put that in, 19RN, and it needs to break that, and it needs to break it fairly soon. Otherwise, that's going to be a lot of resistance. That's the day. The weekly is in leg D. It'll be peak D if there's no new high this week, and the monthly is in leg E. So everything about us is technically is done very well. On a very short-term basis, the rudder, the 120-minute chart, has turned around and says, you better hold $16.30 to $16 because if it breaks that, it's going to make a little Eiffel Tower in the daily and say, uh-oh, I need a bit of a breather. I've had a very good run. I'm going to have to test the 1587, 1580s, which is the 9-period moving average in the weekly chart. At this particular, so the question is, are you in it? What are you doing with it? Dan? Oops.
Can you hear me?
Yes, I can. Yes, I can hear you.
Okay.
Well, what are you doing with it?
Well, I'm wondering if I should get in it, and I was thinking of more of a long-term look. Now on the monthly that it's well above the 200 EMA. Do you think it's got a chance to get back to the
it's looking very good in the weekly and the monthly. So what I would do is this: I would have a little bit of patience because it looks to me it's going to make an H pattern, lowercase h pattern right there. It's going to maybe bounce one more day, maybe another half a day even. But if it starts to take out today's low, then just have patience. You want to see it settle in and create some kind of a base, as it does. It always does that. Even if it's just a 1 week base, it makes some kind of a base on the 9-period moving average. I'd have patience to see how it handles that. If in the next not even 3 days, but by Wednesday morning, if it hasn't taken out, it's at 1735. The low today is 1670. If it hasn't taken out 1670, that's very good action, but I would still treat it as a small position, and I would just accumulate it as it's holding support. I don't want to. The reason why I say small position is the candle on Thursday said something happened there that was quite serious. So I need to know how it's going to handle that. And if it's able to get halfway into it to 1774 and then close above 1774, I would say that's quite good action. If it goes there and then it reverses and closes down, it says, watch out, I'm about to make that H pattern and I'm going to do some retesting. So I'm going to recommend keep it on your list. I'd have a little patience. If it breaks out from here, well, then it's gone. I think it's going to consolidate. With the general market in this week is a consolidation week. So I'm thinking that BFR, Banco Francés, is going to also take a little bit of a breather here. Let's see how it does. I don't like the candle. I think it was Thursday. That gives me pause. Instead of jumping in, I'd say have a little patience. Let's see how it builds some kind of a base. And that base, as I say, should be in the mid to low 16s. Could even test 1588. Hope that helps you.
Thanks, Basil.
Thank you very much, folks. My service is the opening call. Check it out every single day, and even on the weekend, I send my charts to my site, the opening call, and also if you did do it with with getting my webinar that I did 2 Thursdays ago, that'll be very interesting. All right, Larry Pesavento, come.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.